What's up, everybody? Welcome to the Stocks channel. Today was another very volatile day in the stock market, and we see the VIX going up over 32 at the close. So volatility is back in a big way, and we have a lot to cover tonight. Before we get into it, please remember to smash that like button and subscribe to the channel. And first up, we're going to take a look at the SP 500, and we're looking at the SPY ETF. So let's go ahead and crack open this chart and see what's going on in the stock market today. All right, so with today's price action on the SPY ETF, we see the price going down negative 1.85%. And we had an extremely volatile day at one point, trading all the way down in the 335s. Now you can see if we zoom in here that 5 EMA is starting to cross below the 13 EMA, which tells us that our short-term bull trend is now in jeopardy and we're starting to break it into a bearish trend. Our 20 simple moving average is still sloping upward, but our price action is now closing down below the 20 simple moving average. So our last line of defense for the bulls is the 50 EMA and our support trend line, which did hold up today, but there's still more time for the bears to try to drive the price lower. So a close below 341 and a close below the 20 simple moving average is not bullish price action by any means, and the bulls need to start getting defensive in this range. Now you can see we did have a spike in volume today, which is to be expected on a very volatile day. There's a lot of people selling and there was also a lot of people buying. Now the one thing to note, if we go to a 1 hour chart and we close this trend line, you can see that we're still trading within a tight channel and we're still finding support at the bottom of this channel. Now you can see this is a very bearish trend because we're making lower highs and lower lows on the 1 hour chart. So it looks like the bears are starting to take over, and we're seeing evidence of that on the daily chart. We're starting to see the trend reverse. So going back to the daily chart, the bulls need to hold up above the 50 EMA as well as this trend line to try to break this bearish trend that's developing and head back into a bullish trend. You can see at one point during the day, the wick was trading below the 50 EMA and also trading below our 0.5 Fibonacci retracement at $337. So buyers did start stepping in at some point during the day, and we did close up around 339. So if you're a bull on this market, the number one thing you need to watch is that the price action can remain above the 50 EMA and above our support trend line. That's a price target right around $338, and if we start closing below the 50 EMA, I believe the bears will be in full control of this market. Right now, it's still a battlegrounds between the bears and the bulls, but the bears are starting to slowly take over, but it's not over yet for the bulls. There's still a lot of technical reasons the bulls can recover this chart. If we start to bounce off of these support areas and we can continue to head higher, the bears will not win this battle. However, if the bears can break below and close below the 50 EMA and start heading to the low 330s, the bears will have full control of this market, and there will be a lot of resistance levels that the bears can continue to short into. So right now, I would not recommend shorting this market because we're due for a technical bounce. Even if this downtrend is going to continue, it's likely that we could see a 2 or 3 day bounce off of these levels because we're starting to get very oversold. The number one thing to watch if you're a bull is you need to go back to this 1 hour chart, and we need to start closing back above this resistance trend line like we did on Friday. So it's too soon to say this could have been a bull trap because it did look like we were starting to break out and the bulls looked like they wanted to start running, but then we get a huge gap down this morning and a bleed out of the price throughout the trading day. Now you can see the last 1 hour of the day, we did get a lot of buyers stepping in and we did get a large green candle on an increase in volume. So the bulls could be stepping in and they could have found an attractive buying level and they could start driving the price higher. But they still need to close back above this resistance trend line somewhere around $343. So right now the bears and the bulls are at a crossroads and they're really battling for control right now, and right now I have to give the edge to the bears. But keep in mind, we are due for a bounce and we could get a 2 or 3 day bounce before resuming our downward trend that we're currently starting. So next up, let's go ahead and take a look at the Nasdaq 100, and we're looking at the QQQ ETF, and we see something very similar on the Nasdaq, also closing above the 50 EMA and our support trend line. However, we do see that 5 EMA did cross below the 13 EMA and the price action did close below the 20 simple moving average. So we'll have to call that bearish price action and a short-term bearish trend. And the only benefit the bulls have right now is they still have 2 levels of support and they still have a positive sloping 20 simple moving average. So the bulls need to start stepping in soon to break this short-term bear trend. And we could see that the price action did find support somewhere around that 50 EMA and the 0.5 Fibonacci retracement level around $279. So going to a 1 hour chart on the Nasdaq 100, If we take this resistance trend line and we clone it, we can see that we're also trading inside of a downward channel on the Nasdaq 100 as well. So this is definitely a downward trend, and this is definitely a bearish trend developing. So the bulls really would need to snap this trend and break out above this resistance trend line somewhere around $283. Remember, $283 was also our very important support level that we were holding up above last week, and that is now broken down. So the bears are starting to show bearish price action, and the trend is starting to turn bearish as well. However, remember, we do have time for a technical bounce, and we could see a 2 or 3 day bounce from these levels, but you don't want to get trapped in these trades, and you don't really want to be shorting this market at this point. If you were bearish on the market, the time to be shorting was up here at the top when we were extended out above the upper Bollinger Band. Trying to short now would be the equivalent of buying in on a bull market that's already gone parabolic. You're just FOMOing in. So I don't recommend shorting something that's already gone down this much because it's likely to see a bounce. Now, if you're bullish, you could take this as an opportunity to start buying, but you still need to set your risk and your stop losses under these critical support levels. So right now, a close below the 50 EMA would be another bearish sign, but as long as we can hold up above the 50 EMA and hold on to this medium-term bull trend while that 20 simple moving average is still sloping upward, the bulls could still recover this chart. So again, it's a very volatile trading session. Going into the US election, there's a lot of volatility, and if you're not sure what to do, you're better off just sitting on the sidelines until this volatility starts to go away. Next up is the Dow Jones Industrial, and we're looking at the DIA ETF, and we see the Dow Jones is by far looking the worst. The price action closed below the 50 EMA, and it also closed below our support trend line. The Dow Jones price also closed below the 0.5 Fibonacci retracement level at $277. So it's not looking great for the Dow, and we did see selling on an increase of volume. So it looks like the big money is starting to get out of the Dow because we didn't see this bearish price action on the SP 500 and the Nasdaq 100 because those are still trading above their support and above the 50 EMA. Now also keep in mind that the Dow did open a gap above, and that gap will close at a $281 level. So we'll go ahead and add a resistance level at that point because that gap close could be resistance, and we could see more bearish shorting going into that level. You could see at one point from the wick on the Dow, we were trading all the way down below the 0.618 Fibonacci retracement level at 274 and also outside the lower Bollinger Band. So overall, the Dow Jones had very bearish price action, and it did close in a bearish price. So next up is the VIX, which is our fear indicator, and we see the VIX finally got a close above that 29.6 level that we've been watching. So this means the market is very fragile because we have a VIX level that is now in the 32s, and this is where we could start seeing huge swings in either direction. Just remember, if you are a bear, a high VIX does not necessarily mean that the market is going to continue to go lower. When the VIX is in the 30s, we could just as easily see volatility in the upward direction. So instead of going down 3%, we could go up 3%. Volatility does not take sides. It's just typically fear, which is equivalent to selling. Now, once selling is overdone and we're oversold and the VIX is still elevated, we could see a lot of short squeezes and a lot of short covering, and we could also see volatility in the up direction. So just keep that in mind. If you are a bear, there's still risk in this market, and shorting is not a guaranteed win. So the one thing to note on the VIX is we do have a resistance trend line, and this is forming lower highs on the VIX. Now that trend line brings us up to a VIX level of right around 35.5. So if the VIX starts closing up above the resistance trend line at 35.5, that will be another huge concern for the bulls, and we're likely to see this market start getting taken over by the bears. So right now the bears are definitely in control in the short term, and we're seeing evidence of that because there is a lot of fear entering this market. We're not likely going to see new all-time highs while the VIX is in the 30s, and we're more likely going to start trading down and or sideways. I say sideways because we could start getting bounces and we could start selling off, but we could end up going nowhere in the grand scheme of it. We could just be going sideways for the next week or two going into this election. So remember, with an elevated VIX, there's going to be a lot of risk and a lot of volatility. So protect yourself whether you're shorting or trying to trade long. You need to manage your risk and know your entries and exits and control your risk with very tight stop losses. So next up is the sectors driving the market, and the first sector we're going to take a look at is the financial sector. So financials closed down over minus 2.26%, and we did get a close below the 20 simple moving average. We still have that benefit of a short-term bull trend because the 5 EMA is still above the 13, but the price action is getting more and more bearish, and if we can get a price action close below the 50 EMA, we're likely to get another retest of our support trend line. So at this point, the bears or the bulls aren't really winning. It's just a matter of volatility, and we're seeing price swings in both directions. In order to get back to bullish on this market, we would like to see a price action close on the financials back above that 20 simple moving average. And if you're a bear, you want to see a price action close below the 50 EMA. Next up is the industrials, and we see the industrials also with bearish price action closing back below the 20 simple moving average. The short-term bull trend is starting to head down, and we could see the 5 EMA cross back below the 13 EMA. The price action is still trading above the 50 EMA, and we're trading right about in the middle of the Bollinger Band. So it could go either way. If it's going to remain bullish, the bulls have to step in soon, and they really don't want to let the bears close below that 50 EMA. But keep in mind, the grand scheme of the industrials is we do have higher highs and higher lows on the daily chart. And even on a day like today where industrials go down minus 2.5%, we're still maintaining that medium-term bullish trend. So don't get too bearish on this market over one day of selling. We need to wait and see what's going to happen for the next couple of days. Next up is the healthcare sector, and we see healthcare's price action closing just right about on the 20 simple moving average. We could see a very volatile day, and at one point we were trading below the 50 EMA, but the bulls did step back in and they drove the price back to the 20 simple moving average, and we're still maintaining that medium-term bullish trend as well as that short-term bullish trend with that 5 EMA still above the 13. So we're at very important inflection areas on some of these sectors, and they could go either direction right now. So we need to wait and watch, and we need to see if the bulls are going to stay in control or if we're going to get a bear invasion and we're going to start seeing lower stock prices. Next up is the US dollar, and we see the US dollar having a bullish day, closing up 0.35% today and closing back above its 5 EMA. However, you can see this trend is still very bearish, and on the short term and the medium term and the long term, we still have a bearish trend on the dollar. So remember, a weak dollar will typically mean asset prices inflating, which would be bullish for the stock market. So the bearish trend on the dollar is a bullish sign for stocks. As long as the dollar can remain in this bearish trend, we would expect to see a continuation to the downside unless we start to see the price action closing back above the 20 simple moving average. So everything's still looking bearish on the dollar, even though we did get a bullish day, but one day does not set a trend, and we can see that the trend is still bearish. Next up is gold, and gold went absolutely nowhere today and closed just below the 20 simple moving average and our support trend line. So gold's at a point where if the bulls are going to drive gold higher, they need to step in soon, and they need to start driving the price of gold back above the 50 EMA at 1906. On gold, we would like to see a break of 1930 and then a test as support and a bounce, and we could be a buyer of gold if we get this situation and this opportunity to test resistance as support and get that confirmation of the bull run. But right now, gold's still in this consolidation, and it's tightly coiling and getting ready to make a large move to the upside or the downside. So we don't want to guess, we just want to watch and wait and let gold tell us which direction it's ready to go. A quick update on silver, we're still in consolidation and we're getting close to bouncing off of support or breaking right through it for the bears. So on silver, we're looking for a break of 25 and a test of support if we're bullish, and if we're bearish, we're looking for a break below support at 24 and a continuation of the downside. Next up is Apple, our market moving stock, and we see Apple still in that short-term bear trend because that 5 EMA is still trading below the 13 EMA. We could see the price action at one point was trading below the 50 EMA and our 0.5 Fibonacci retracement level at 114, but ultimately we did find support for the bulls at that level and we did close higher. Now the price action is still looking bearish because we're trading below the 20 simple moving average and the short-term trend is bearish. The medium-term trend is still bullish, so the bulls could step in and fix this chart soon if they can drive the price higher off of this level of $114. If the bears get a close below 114, they could take over and we could see Apple continue to head lower. Next up is Tesla, and we see Tesla still holding up above its 0.5 Fibonacci retracement level at 408. But we are continually getting closes below the 20 simple moving average, and the short-term trend is remaining bearish with that 5 EMA trading below the 13 EMA. So right now there's nothing looking that great on Tesla, and it looks like it wants to come down and test its 50 EMA right around $403. So right now I would be patient on Tesla and I would wait to see if it's going to get taken over by the bears before getting too bullish, because Tesla did have a very monster run and it could be time for a cool off. This used to be our FOMO stock, and as you can see, nobody is really FOMOing into this stock anymore, and a lot of that FOMO has subsided and there's not a whole lot of volume and a whole lot of buyers driving Tesla higher anymore. So the best thing to do on a FOMO stock when it starts to cool off is just step to the side and wait for the next opportunity. Next up is Bitcoin, and we see Bitcoin still continuing to remain bullish, and we're still getting price action closes above that 5 EMA. We're starting to consolidate around $13,000, and it looks like we're getting ready to move that next leg higher up to our $14,000 price target. So the Bitcoin bulls still look like they're fully in control, and they're just taking some time to cool off and digest some of these recent monster moves that we've had, forming somewhat of a nice bull flag, getting ready for the next leg higher. So to pull this all together, the market is absolutely going to be volatile, and we're likely going to see price target swings to the upside and the downside. Right now, the trend is starting to break down into a bearish trend, but as long as we're getting price action closes above the 50 EMA and above our support trend line, the bulls are not done yet, and they can continue to fight and try to drive this market higher. However, if the bears can get a close below the 50 EMA, that will be a breakdown of the bullish trend, and we will start to see lower prices on the stock market. So right now we're at a battlegrounds, and the bulls really need to step in a meaningful way soon, and they need to try to fix this short-term bearish trend that's developing and start driving stocks higher. Now, going into the US election, remember there's going to remain a lot of volatility, so if you're not sure what to do, just be patient and maybe stay in cash for another week or two until some of this starts to calm down and we start to get more clarity if we're going to head higher or if we're going to continue this downward trend. There's still the possibility that this is just a correction after we had this huge monster move in the stock market that happened in a short amount of time. So be patient and let's watch and wait, and we'll develop more price action and we'll be able to see where the trend is going soon. So please remember to help me out by smashing that like button. I really hope these updates are helping you out. And if you haven't already, go ahead and subscribe to my channel so you can follow along with all of my updates. Thanks for watching, everybody. And as always, I will see you in the next episode.